President and CEO of the Credit Union Association of the Dakotas, and Mr. Jeff Olson, who is Vice President for Advocacy and Awareness for the same association. It's based here in Bismarck. Gentlemen, can you just tell us what you do in your jobs? What is the function that you perform?
Well, Dale, we're the trade association, so what our job is to talk about, go out and promote credit unions, make people aware of what credit unions are, the credit union difference. We're also, from a regulatory and a legislative advocacy standpoint, we're their lobbyist, both here in Pierre, because we are a two-state league and two-state association, as well as in Washington, D.C. So Jeff and I spend a lot of time on the road, a lot of time dealing with legislators, both state and nationally, a lot of time dealing with regulators and examiners. We provide annual meetings, training, opportunities for credit unions to share the industry together, to learn from one another, and to have some educational opportunities.
So how do the regulators and examiners in North and South Dakota treat you?
Well, you started off right off the bat with that question. Well, I could say that with our relationship with our regulators, especially here in North Dakota, because in North Dakota, there's credit unions, about half of them are state chartered, half are federally chartered. In South Dakota, all the credit unions are federally chartered. So we only have one regulator for half of the credit unions, essentially, in North Dakota. And we have a great relationship with the banking department. I think that we're kind of a model in terms of the way that they regulate us here. I think our relationships with them from an examination standpoint, nobody likes to get examined. Nobody likes to go to the dentist for an examination. Nobody likes to have examiners come to them either. But I think for most credit unions, they see that really as a benefit and come out and they actually help them more than concern. So I think our relationship with our regulators is very, very good on a state level. I think it's really good on a national level. We just got back, Jeff and I, and about 10 credit unions from going to see the National Credit Union Administration. That's who our regulator is, and had a chance to meet with them. And we certainly don't agree on things all the time, but I think we're able to generally get some good compromise and some good feedback and some good dialogue. What's
the difference to a consumer as to whether his or her credit union is federally chartered or state chartered?
There really isn't a lot of difference. It's just really, it's a preference with the credit union, how they were established and how they got their charter. Not every state has a state chartered credit union act. North Dakota has one. There is many benefits of having your local examiner, like the Department of Financial Institutions. The state chartered credit unions like that local control and having the opportunity to work with the state credit union board in the state and bring the issues right to them and take care of things locally. They still have to abide by the federal regulations and so forth, but there is that local control issue, and that's why we like having the State Credit Union Act in North Dakota. That also makes us relevant with legislators, because there are things that the legislature looks at during the session and during the interim that does affect our credit unions, and actually ultimately it goes down and affects our consumers.
One of the great things about the dual chartering system is that the state credit unions get to be incubators of innovation and really get to try things here that maybe they don't get to do on a federal level. And a lot of times those things then get adopted on a federal level. Similarities, though, just to point that out, is that whether you're state chartered or federally chartered, it really doesn't matter to the consumer that comes in, because they're federally insured no matter what. All credit unions in North Dakota and South Dakota have to be federally insured under the National Credit Insurance Fund, which is backed by the full faith and credit of the United States government, just like FDIC insurance.
How many credit unions are there in North Dakota and South Dakota?
There's 42 credit unions in North Dakota, 40 credit unions in South Dakota. And those range, in size. All the way from the smallest credit union is about $600,000 in total assets, and the largest credit union is about $950 million in assets. Billion would have been
Can you tell me why do people belong to credit unions? What's the advantage to them?
Well, there are a lot of advantages to it. I think the biggest question we get in our credit union gets are what's the difference between a credit union and a bank? And the answers when we talk about it, it's two and it's three. With a credit union, it's you as a member in your credit union. And with a bank, it's you, the bank, and shareholders. because those are the people that are invested in it. So it's that simple. When a credit union, when you have $10 in your credit union, you become a member and an owner of that credit union. On the bank side, they're a for-profit business. Obviously, they need to make profit to continue to grow, but the people that invest in that bank are shareholders, and they want to see a return on their investment. Well, we want to return our investment back to our members, our member owners, in many kinds of forms. So whether it be a dividend or it's in the form of lower fees and services, and we are like a bank. I mean, we offer the same services. Not every credit union does, but everything from mortgages to refinances to vehicle loans, savings accounts, credit card programs, ATM debit services, and it depends on the credit union and the size of the credit union, what kind of services they want to offer.
Could you explain just give me a sense of the diversity of communities of interest that have credit unions? I mean, I drive down the street in Mandan, there's the railway credit union, there's the community credit union. How do credit unions form around communities of interest, and how many different ones are there?
Yeah, credit unions generally are structured in one of two ways for the most part. They're either a common bond, which means that they're an associational based. You had to be a member of an organization, a teachers organization, a union, some other, fraternal organization, or you worked for a certain company, it was a certain occupation. So they used to, Coca-Cola credit union would be an example, or something like that. Credit unions that actually spawn off from there. The other type is a community chartered credit union, which is they can serve a specific geographic location, which is limited by both state or federal law, depending on whether you're state or federally chartered. And that limits how far out you can actually go, how far you can serve the members. I'd say about half of the credit unions, maybe a little bit more than that, are community chartered. And many of them have had to move to that community charter because it's created an opportunity for them. Either their seg group maybe went away, the company closed, the organization got too small, and so they then expanded to a community charter. But you have credit unions that are community charters in small communities and large communities in the Dakotas. Certainly we have a number of credit unions in Bismarck, in Fargo, in Minot, which Minot's it's a phenomenal credit union town. I think there's 7 or 8 credit unions, and most of them are community chartered credit unions in Minot, Grand Forks. But then we have a lot of credit unions that serve really small rural communities. I mean, you take a credit union like Lisbon Farmers Credit Union as an example. A $5 million credit union in a little tiny community. There's a small community that does a great job of serving the farmers in that community. And that's a community chartered credit union in that area. So there's really they're going to be structured in one of those two ways. But they really are community-minded institutions, whether they're structured as a organizational or whether they're structured as a community chartered credit union.
You mentioned that Minot is a phenomenal credit union town. Why is that?
Yeah, I don't know. I think it's just they started out with different seg groups that were up there. A lot of people, there used to be a lot, just like a lot of other industries, we've seen a lot of consolidation, and that's happened up there. I think that at one point in time, in North Dakota, there was over 100 credit unions, and now there's down to about 40. But there's, they're bigger, they're stronger, they're able to offer more services than they used to do. But that's, I don't know the answer to why that really is.
Well, I think the military has a lot to do with it. You have military credit unions all over the country, and as you move from base to base around the country, it's pretty easy to move your credit unit account, and so the Minot Air Force Base has something to do with that. Now, on the other hand, Grand Forks doesn't really have. They have a military credit union, but it is not a member of our association. It's an out-of-state credit union. But in Minot, they have Northern Tier Federal Credit Union, which is on the base, and they also have a community charter too. And so they're located on Broadway, which is Credit Union Row. As Robbie said, there's 7-8 credit unions on that street. Over 40,000 credit union members in Minot alone.
I was thinking that it could be because of the base, or it could be because, Minot's a railroad town, an old railroad town, and I imagine that would...
I think it's possible that it's just really smart people that know that credit unions are a good option that live up there.
All right, we'll adopt that interpretation, no problem. I mean, what is the credit union's reason for being? I mean, why do we need credit unions? Why can't we just have banks?
Well, that's a great question, and credit unions they are cooperatives, just like you have food cooperatives, egg cooperatives. We know a lot about cooperatives, a lot of cooperatives in the Dakotas. And as a result of that, we live by those principles of cooperatives to help one another. So being able to put all those money in and be able to give better rates back to their individual members. And we live under a philosophy of people helping people. That's what we're there for. We're not driven by profit, and there's nothing wrong with that model. It's a different model. But our model is that we want to return all of our profits back, with the exception of a small amount to be able to maintain our earnings, back to our members. And we want to make sure that the fees are as low as possible, the rates are as low as possible on loans, and high as possible on deposits. We're there for each other. We always say that we're for people. We're not charitable organizations, but we're there to help each other. We're there to help our credit unions and be part of our communities and help our communities be strong. And if we weren't here, from a competitive standpoint, we create competition in the marketplace, which is great for consumers.
We're talking tonight with Mr. Robbie Thompson, whose voice you just heard. He's the President and Chief Executive Officer of the Credit Union Association of the Dakotas, which is based in Bismarck. We also have Mr. Jeff Olson, the Vice President of Advocacy and Awareness for the Credit Union Association of the Dakotas.
Question that has come in by GreatPlainsNews.com, Dale, that I wanted to pass along from.
And that is Scott Hennon, the gentleman who just butted in. What do you have there, Scott?
On behalf of the listeners, sorry,
of
Dale.
Course,
yes, exactly.
No apologies necessary.
The question comes from Corey. Corey says, "Why do the credit unions not pay taxes?" But I would assume you pay some taxes, right? You pay property tax. You're paying what? Is there a difference on your tax structure versus other financial institutions?
Absolutely, there is a difference. First of all, credit unions do pay property taxes, do pay sales taxes in many instances, and do pay payroll taxes. So they do pay a significant amount of taxes every year. They are tax-exempt organizations because of their not-for-profit structure. We are structured differently. That's really the difference between a bank and a credit union, is that with a bank, they're structured to provide a profit back to their shareholders. As credit unions, like other not-for-profits, we're not structured to generate a profit. We're structured to return enough to put in retained earnings, but anything we make actually goes back to our membership, or it reduces the fees. So as a non-profit structural organization, that's why we're exempt from federal taxes. We've been exempt from federal taxes since 1934. It's a benefit for the overall consumer. We've estimated that the average consumer, by the average family, by being a member of a credit union in North Dakota, saves about $150 a year. We've added about $13 million to the North Dakota economy by having members be in their credit union. So that's why we're tax exempt, because of the way that we are built. We're built not to generate a profit. We're built to return our funds back to our members.
Is that a sort of a back and forth with other financial institutions? They see it as, I suppose, a competitive advantage for the credit unions, right?
Well, yes, they do, and I think sometimes we're referred to incorrectly as taxpayer subsidized. And if you look up subsidized or taxpayer subsidized, we are not receiving a dime from taxpayers. That was from our original charter. You have to know the history of credit unions to really understand that. And we were started by people that got together as cooperatives because they weren't creditworthy. They couldn't get any money or help from their local community banks, or there wasn't any community banks. So basically what you had is you had 5 people that had $20, and they put their $20 in a pool. And so they had $100 to loan, and they gave $100 to their neighbor, who then repaid it at $10 interest on it. So now that original group of 5 who were owners had $10 of capital. So what do? They turned around and reinvested it again in the next neighbor who needed the money. And that's how these financial cooperatives started. There was a serious need for that. And as we look at our economy today in the country, we are living in an era where people are really irritated with the banks. And yes, community banks and the banks around here and credit unions were not involved in the practices that really got us in the financial situation we did in 2008. In fact, the cooperative credit union model has been talked about in op-ed pieces across the country for the last 4 years. It is the most efficient financial model out there. And so it works. And so there are a lot of people right now that we would call unbanked. Especially after 2008, the banks tightened their strings a little bit. Not so much here in the Dakotas, but across the country. And people were all of a sudden being dropped because the regulators came in and said, you can't charge for overdraft fees, you can't do this, you can't do that. And all of a sudden now, these people that were the banks were making money off of were dropping them. So where do they turn to? They have to turn to alternatives, whether it be the street corner payday lenders or whatever. They had to get somewhere where they could get credit or get financial services. And the credit unions have always been there helping the underserved.
Corey, thanks for the question, by the way, and welcome others at GreatPlainsNews.com. GreatPlainsNews.com always welcome questions from our audience, which you can certainly, in addition to listening to us on our flagship 550 K-Fire and AM 1100 The Flag Fargo, AM 1090 in Tioga. Watch us online at GreatPlainsNews.com or submit your questions. Dale, back to you.
Speaking about the difference between banks and credit unions, did any credit unions have to take federal bailout money?
Zero.
Okay. Do you think that gives you a bit of bragging rights over banks?
A little bit. I think, as you look at the financial thing, there were credit unions that were affected by the meltdown, no doubt about it. We're a three-tier system where we have what we call a natural person or a consumer credit union, that you and I go in and do our banking services every day. Then we had a corporate credit union, and the corporate credit union is a credit union for credit unions. Being able to maybe hold some of the profits that credit unions have. They could make some investments. They had a little bit more leeway in how they could manage that money. Well, they invested in mortgage-backed securities. These corporate credit unions. They were 26 back in 2008, and we all know what happened to mortgage-backed securities. These were AAA rated mortgage-backed securities that went down. And so what we didn't go to the government and ask for bailout money. We, as a system, rebuilt our equity and our liquidity.
Can you tell me, you mentioned earlier that there used to be 100 or so credit unions and now there's 40. Is there a continuing pressure amongst the credit unions that are still left to merge? Is there pressure in the industry, particularly in North Dakota and South Dakota, to get bigger?
I don't know that it's really so much coming from the industry, and I don't think it's coming from regulators in particular pushing that. I think what it's coming from is regulation and the amount of regulation. The primary reason that a credit union merges most of the time is because they just can't keep up with all of the regulations. Over the last 4 years, we've estimated about 18,000 pages of new laws or regulations that we have to comply with. And if you're a credit union that's a $15 million credit union, you got 6 people that work at your credit union, it's extremely difficult to be able to continue to operate under all of the regulations that are out there. Mortgage loan documents went from 10 pages to 100 pages, or account opening is from 3 to 16 pages. So it's a lot of different a lot of regulations is really the biggest reason. I think it's that, and just they want to make sure they're able to serve their members in the future. I think that every credit union makes their own decision about mergers. That's not something the industry is pushing, but there likely will be additional consolidation in the future.
And these 18,000 pages of regulations, what do they do? What do they make you do?
Well, I think that when you look all the way back, if you were inside of a credit union, you just had what we refer to as the alphabet soup of regulations A through Z. It can be regarding lending. It could be on the deposit accounts. It's privacy regulations. It's ATMs. It's dealing with your electronic cards. It's statements that you have to send out. The amount of paper that we have to push as a result of all the regulation is substantial and continuing to grow each and every day.
You mentioned the structure of a credit union, how it's membership owned, et cetera. Has one of your arguments been that, look, we don't have, frankly, an incentive to defraud our customers because our customers own us?
Well, one of the
maybe
things
defraud is too strong a term.
Yeah,
but
I think we're here in the Dakotas. We have really good banks. So I don't think we don't really argue with our banks all that much. So they do a good job, and credit unions do a good job. They do a very good job. So I don't think there's either one of them have a motivation to defraud. So I think that is a little strong. But if we were to use maybe a word, that we have volunteer board of directors at credit unions. So you could, if you're a member of a credit union, you could actually become one of the board of directors and actually oversee the credit union. And of course, that's your friends, family, neighbors. You want to do the right things for them.
I guess I should have used the term maximize profit.
Well, I think that's most board of directors set their rates for credit unions, and of course they're also members. They're also there, and their friends are members, their families are members. So they really want to try to keep the rates down as much as possible and do the right thing for their members.
We're speaking to Mr. Robbie Thompson, the President and CEO of the Credit Union Association of the Dakotas, and Jeff Olson, who is Vice President of Advocacy and Awareness. This is the Legislature today at the Peacock Alley Grill and Bar in downtown Bismarck.
You just wanted to say that, didn't you, Dale?
I wanted to try to say it with your sense of vigor.
All right, quick break. Back with more so Dale can go sign some autographs after this short timeout. Don't go away. We're coming to you live and direct from the Peacock Alley and continue our conversation with our guests. And by the way, we welcome the sponsorship of the Credit Union Association of the Dakotas. Looking forward to this partnership over the legislative session. Get a chance to visit with them about issues before the North Dakota Legislature and also learn and meet from their members and communities in every corner of North Dakota, which will be an important part of the program. We're looking forward to that very much. Day one of the North Dakota Legislature in the books. Day two tomorrow. And, of course, our coverage continues. Don't forget, Monday through Thursday nights, we're here with this broadcast. 550 K-Fire is our flagship, as well as affiliates in the Red River Valley, AM 1100 The Flag, and Talk Radio 1090 KTGO in the Bakken. You can also watch us at GreatPlainsNews.com. We also, Saturday, are starting an all-new Saturday recap edition of the Legislature today. That'll be from 10 a.m. until noon on K-Fire and our affiliate stations. So look forward to that as well. All right, back to the questioning of our guest, Robbie Thompson, President and CEO of the Credit Union Association of the Dakotas, and Jeff Olson, Vice President for Advocacy and Awareness. You mentioned earlier, Robbie, that you were in South Dakota. I just had a quick question before I turn it back to Dale about the difference in the hallways of the legislature in South Dakota. Obviously, they don't have quite the prosperity we do, thanks to the trifecta of oil and energy and a few other goodies that are cranking in our economy. But how do you assess the differences? You heard Dennis Dugard, the governor of South Dakota, give the state today, and contrast that with what Governor Dalrymple has in the way of a set of cards up here.
Well, I haven't had a chance to hear our governor here in North Dakota's speech yet. I'll have a chance to go home and listen to that. But I thought the governor of South Dakota did a great job. The South Dakota is doing better than the majority of states in the country. The governor did point out of a number of states. Boy, when you start looking around the country, we are so fortunate here in North and South Dakota to have I think that we've had good government for so many years that's done a really nice job and be able to be fiscally sound and make investments smart and wise. And as a result of that, we're doing quite well as a state in North Dakota and in South Dakota. And so I think that there's obviously a number of issues that they're going to be tackling down there. But I think that they're looking at a little bit of a surplus in South Dakota, and that's always good. Although then I think everybody is looking for where they can spend it, but so that makes it somewhat more challenging at times. But it's going to be an interesting session. There's a lot on the plate with regards to criminal justice reforms is probably the biggest issue that the governor talked about today. A lot of things with regards to government. One of the things that I was really excited to hear about was that. They've went through, and if I get the numbers wrong, forgive me, but it was a little while ago. I don't have all my notes here, but I think it was 24,000 pages of laws that they've been able to eliminate or regulations. So we like seeing regulations and laws being reduced in terms of if it's unnecessary or it's old that doesn't really apply anymore. So
maybe we could get a border battle going with a competition in that regard. That wouldn't be bad.
I'd like to see that. We can throw that back and forth. This year their proposal is for 70,000 pages. So I hope they make it.
Very interesting. I'm also curious. So you guys are in the unique position of obviously dealing with state government in both states. 80-day legislature every other year in North Dakota. Was it 40 days?
40 days
every year in South Dakota. What's better?
Well, it depends who's listening, right?
Well,
depends who you ask.
I think it's having been down to Pierre quite a bit the last couple of years too during their session, especially when ours is and we're on break. ours is a little more intense. I mean, there's the number of bills and the amount of hearings here is a lot more intense. Where the pace there is a little bit more laid back, and you can approach the legislators a little bit more. Where here they're pretty busy, and they got a lot to do. You got 1,200, 1,500 bills to go through here, and every bill gets a hearing, and whether it comes out of committee, do not pass, it still gets voted on the floor. I mean, it's a unique situation here, but I think it's a little more intense here. Yes, very interesting.
I think they work hard in both states, though. I mean, I really do, and I'm not just saying that to be politically correct, but I really do. I mean, it's amazing how many bills in both. When you count the 2 sessions down there, it gets pretty close to what we get in our 80-day session here, and similarly, it's we're one of the few states up here that every bill is going to get heard, and that's so important.
Earlier, it was mentioned that credit unions, one of their founding principles was, you had a bunch of folks who got together, pooled their money. These were people who did not qualify for bank financing for one reason or another. Is it easier to get a loan at a credit union if you have less than sterling credit?
I think that 25 years ago the answer would have clearly been yes. But I think that today it's a little bit harder to do that based upon regulation and secondary market requirements on mortgages, and the regulators examining you for your loans and your quality of the loans. I do think it is a little bit easier to get, especially the small dollar loans. I hear of an example of a $900 billion credit union that tells us frequently about how they still give out $50 or $100 or $200 loans for people to get through, and where interest rates are capped, so it's not like they're going to. These aren't 200-300% payday type of loans. These are small interest rate loans that they make no money off of, but they do that as a service. Additionally, I think that because you're a member, you build up a relationship over time, and you start to be able to give a little bit more in the lending aspect, a little bit more creativity and being able to help people because you've got a history with them. That is. So, I think that generally we do fight a little bit more for our members. We do try to give those loans, and we do try to give them reasonably, in terms of an interest rate.
One of the things that larger banks have been criticized for in recent years, and this is still happening, is there is a proliferation of fees, and the fees that do exist, sometimes they're increased. Are you able to take advantage of this to recruit customers away from banks that follow these types of practices?
Well, we think credit union is the best alternative out there for financial services, obviously. We think that it's the best structure and the best model. So we want to encourage people to come to credit unions because of that because of the differences that we have there. But I think more and more consumers are seeing that the benefits of credit unions. They're seeing that generally our fees are lower and our rates generally are better because we don't have to maximize that profit for our shareholders. And as a result of that, we've had about 3 million members over the last couple of years that have switched from a national bank to a credit union. And that movement continues to go on, and we think that for a lot of consumers that is fee driven. A lot of it was last year. There was a bank transfer day, which was November 5th. I don't know the exact numbers. I think they estimated around 600,000 or so that switched on that one particular day, and a lot of that was driven because of some fees that were put in that banks were charging. We think that we're going to be able to continue to attract those members because we generally do have those lower fees and better rates.
What's the most common type of loans that a credit union makes? And does it differ, frankly, from the loans that a conventional bank makes?
Well, you could ask that question to 20 different credit unions, and I think about 99% of them would say vehicle loans is probably their bread and butter, but not always. That depends on the credit union and the market they serve.
But credit unions do offer mortgage. Most credit unions do offer some type of mortgage loans, whether it's first or seconds, personal loans. A lot of those small dollar loans, as we talked about before. And one of the things that people aren't aware of is that we offer a lot of small business loans at credit unions, and especially agricultural loans. About a third of all loans in North Dakota given by credit unions our business loans and particular ag loans, and they're small dollar generally. I mean, we give some larger loans from some larger credit unions, but the average loan is about $76,000. So we're helping Main Street. That's what we want to do, is help the mom and pop businesses, the small farmer, and those that are looking for that startup capital.
You mentioned earlier 18,000 pages of regulations in a certain number of years, new regulations. What was the logic of these regulations, and how have they affected how you're able to serve your customers and what your customers pay to be customers of yours?
Well, I think, with Dodd-Frank, I think Congress had to act, and,
Please explain what Dodd-Frank is.
We don't have enough time.
Okay.
But really, what Dodd-Frank, its intentions were, Congress had to act. They have to do something. There were organizations that weren't being regulated, and that were involved in some lending practices, and that did cause the meltdown. But for credit unions and banks, for the most part across the country, they weren't involved in these practices. And so what Dodd-Frank did was triple down on some of these regulations. Let me give you an example. And this is something that took us all summer to get corrected. You use an ATM machine. You go and use your debit card, and one of the regulations was that you have to, and sometimes if it's not your institution's debit machine or ATM machine, you got to pay a fee. And when there was the federal law said you have to have disclosures on that. Not only do you have to have a visual disclosure, you have to have an audio disclosure, and you have to have a sticker on there.
On the ATM machine?
Yes, on the ATM machine.
And so you have to have an ATM machine with a sticker that talks?
Yeah, well, a sticker that said there will be a fee for using this machine if it's not at your institution, and all that. And what was happening is there were groups going around and ripping that sticker off because there was a significant fine to that institution that owned that machine if that sticker wasn't on there. And so there were a lot of, and Robbie's a lawyer, but there were some lawyers following around. So
you had some industrial sabotage going on.
There were some people following around and taking a picture, and there were some lawsuits and so forth. So what banks and credit unions had to do then is really, for credit unions, they had to send a person out there to these ATMs and take a picture or set up a security camera at a significant cost. And really, when that person put in their debit card or their ATM card, it said right there you were going to have a fee. Did we need to have that sticker on? It took Congress all year to get that corrected. The House passed the bill this summer 371-0, and the Senate got the bill in late July. Didn't get it passed until they got the fiscal cliff issue settled. And that's just the gridlock in Washington, D.C. Those are the kind of regulations, and what happens is that affects the consumers. Some of the cyber security breaches have been really, really costly to members. If your credit card or your ATM card is breached, the financial institution usually pays for that. And some of the stuff that Dodd-Frank did do, it didn't cover some of that stuff.
Dodd-Frank, by the way, to answer Dale's question, if I can,
certainly,
is named after Senator Chris Dodd,
right,
a senator from Connecticut, and Barney Frank, a former member of the House who now wants to be a senator again.
Actually, Chris Dodd is a former senator too.
That's right, he is now.
He's working for the Motion Picture Association of America.
He's got that prize gig.
Yes, he does.
That's right. Yeah. Anyway, those two were big on the Senate side for Dodd and the House side for Frank.
It was a comprehensive banking regulation bill,
but in the
financial industry regulation bill.
This is my opinion, but I'm curious if you guys would agree. As far as at least the Dakotas, it was a solution in search of a problem, right? I mean, it more problems than it created fixed anything, isn't it?
I think for community banks and credit unions, are a good model, and they work well in their communities, and they serve people well, and they do a good job, and they do the right things, and they want to help people. I mean, that's generally the way that they operate. And certainly, I know that for credit unions for certain. And a lot of the regulations, were trying to fix. I think you're exactly right. It was trying to fix a problem that wasn't there, or it didn't go after the really big issues. Didn't go after the ones that really caused the problem. It went after a lot of really small things with regards to mortgage disclosures and some of that, and a lot of it's necessary, but it's just one layer on top of another, and that's really where it starts to become a problem. Is it's just the enormity of it, and really even going back to 2001. After 9/11, there was regulations with the Patriot Act and the Bank Secrecy Act, which is a law that all banks and credit unions have to follow, that requires a lot of different reporting, a lot of different internal processes that take place. Almost everybody has to have a Bank Secrecy Act officer in their organization, and if you're big, you got to have multiple ones and track things. And then privacy came shortly after that in the Gramm-Leach-Bliley Act, and then the regulations and the alphabet soup changed, and then Dodd-Frank comes, and it becomes just one thing after another, and it gets more and more challenging for people for consumers too. I mean, how many times do people read their 110-page disclosures when they go in for a mortgage?
Well, here's a question I have. I mean, obviously, access to capital it can hold back the economy, right? And if there's more regulation that makes it more difficult for you folks and your members and or banks to be able to get dollars to consumers or businesses or anything else, is going to be a drag on the economy, right? So it's sort of the consumers are the one that are ultimately harmed in it, and we have a drag on the economy from additional regulation, don't we?
I think both, the fact that it makes it harder to do lending in a lot of instances, but also just, the more regulation, the more expense you're paying on there, and, that raises the price, or it raises the fees, or makes it so that it's just, it's more challenging and more expensive to operate. And so, that's, but in some defense, in terms of Dodd-Frank, one of the things that they did do, and that really, from the perspective of good financial institutions, is that they are going to regulate now a lot of different types of financial services entities, being payday lenders, check cashers, entities such as that. They didn't really have the regulatory oversight before, so they are trying to level the playing field and enforce those regulations, and we encourage that. What happens to credit unions is that we seem to get caught in the middle. We get caught in the crossfire, and when they make a law or regulation, they seem to just include every financial institution.
Who are your competitors these days? Are they medium or large banks, or are they organizations that cash checks, or even Walmart, someone who offers a prepaid debit card and as an alternative to a bank?
I think it's all of the above. It's the community banks, and community banks see us as a competitor. Even though if you look at the market share in North Dakota, the banks have 90% of the market share. In deposits and assets. We're less than 10%, so it's not like we're the big bad little guy that's taking the business away. So, but yeah, I think it's all the above. And sometimes it really comes down to, for a consumer, for a member, can I get that loan? If I have to pay 1 or 2 points percentage, doesn't matter. Can I get the loan? Where can I get the loan? That's kind of the bottom line for people today.
When you have an atmosphere in Congress in which it's fairly common for one bill to have a number of proposals, a number of unrelated proposals in it that gets passed at the last minute, and maybe you don't even know what's in it. Do you see that as frankly, as a hazard, a regulatory hazard for your industry?
Well, sometimes that's a benefit, because we have a couple of bills we were hoping that would happen to.
Okay, so it works both ways.
Well, at the lame discussion, I mean, we had a couple of bills that obviously they weren't going to pass on as a standalone bill, and so we were looking to package them. And actually, we were working. The banks didn't like our bill, we didn't like their bill, but yet Congress wanted us to package them together because they could make everybody happy and pass the two of them. So those things do happen, but yeah, there are things that do come out of Washington D.C. The Christmas tree bills that are damaging. Yes.
Does the pending debt ceiling debate, does that affect credit unions? Does it affect your industry?
I think it does in a little bit, because you have to look at it as a consumer issue, because really as the fiscal cliff, and there are many people that say that there really wasn't a fiscal cliff, but it was really who to tax and how much to tax. And I think that some of the payroll taxes that they'd give us a break on some of it, it's going to affect the consumer, and the consumer is going to have less money in their pocket. I don't care what wage you're making. It's going to affect everybody. And that's going to affect our credit union members, and it's going to affect our credit unions, and it's going to affect banks.
Can you quantify for me a bit, I mean, these regulations that you mentioned? I mean, obviously, you have to employ folks at the credit unions to read the regulations, understand them, and implement them. How does this affect the fees that your customers pay?
Well, I think that it directly that impacts our cost. I mean, I think that we've had some credit unions that have done some research to determine what their cost factor is going to be. You know, I think that there's a number of credit unions that have a compliance officer on staff that they didn't have a compliance officer on staff a number of years ago. And, you know, I think that, you know, as consumer organization, I mean, that's what our purpose is here is for consumers. We want sound regulation. We want good consumer protection. We just know that just putting one layer on top of another isn't good consumer protection. It isn't good regulation. It creates that creeping complexity and makes it more expensive for us to be able to operate our business. And those costs have to get passed on. Both banks and credit unions have to pass those costs on, and it goes on to their members or their consumers.
It's like the old adage, you know, businesses don't pay taxes. You know, they simply pass on to their consumers or, you know, into the marketplace, and so things are marked up to cover their taxes. It's the same thing with regulations and the burdens of the operational burdens that come with them. You can watch any Sunday political show or talk show, and they talk about regulations across the board. And regulations are strangling small businesses, and we're rolled up into that.
Do credit unions in North Dakota work with the Bank of North Dakota?
Yes.
And in what way?
A lot of them sell their loans to the Bank of North Dakota. I don't think credit unions see the Bank of North Dakota as a competitor in any way.
And actually, that's a unique question because of the uniqueness of the state bank and its success. You know, the last several years, and I know, Dale, you've written articles that have gone that people have seen, other legislators in other states, and so what happens is they propose these state banks into their session, and so we get calls from our peers across the country. Hey, how does this state bank work? How do you fight it? How do you work with it? And really, we work in tandem with the state bank here. But what we tell, you know, other states that call say, well, good luck getting the legislator to mandate all state funds going to the bank. Your banks in that market will kill it. So I mean, you know, that's where that conversation ends. But you know, the Bank of North Dakota provides lines of credits for credit unions and some pass-through services and investment services. So we work well with them. I
was just wondering to what extent you had a certain common history, because you mentioned that essentially the credit unions were, in some instances, were started by folks who couldn't get credit elsewhere. Well, the Bank of North Dakota was started because farmers were upset about the sources of their credit and the cost of it, and so rather than, in this case, start a credit union, they started probably the mother of all credit unions in North Dakota, the Bank of North Dakota.
And that model's working, isn't it?
Yeah. I mean, it certainly is profitable. One thing that we should explain, what is the difference between a non-profit institution and a not-for-profit institution?
Well, you know, we're not a charitable organization. We're not a 501c3 type of entity. That's an IRS tax code provision. You know, we do have to make a profit, but our profit is returned back to our members, or it's put into retained earnings and then reinvested back into the credit union. Where a non-profit is, you know, they don't really have any profit motivation at all.
You don't get tax benefits by being a member of a credit union because you are a member or making an investment in a credit union. So,
what's you mentioned the range of size of credit unions in North Dakota. Can you give an example in terms of like the size of their assets? What's a big credit union in North Dakota, and what's a small one?
Well, it's, you know, when you think about credit unions, there are actually 3 banks in the country that are larger than the entire credit union industry put together. So those 3 large banks, actually, each one individually is larger than all the credit unions. So what do we consider big? A lot of people probably don't consider big. For us, largest credit union here in North Dakota is about $450 million. And but regardless of their size, they're all operated under that same structure. They're all not-for-profits. They're all community-minded. They're all run by a volunteer board of directors where everybody gets 1 vote and 1 share, and looks out for the consumers.
The gentleman that you're listening to is Mr. Robbie Thompson. He's the President and Chief Executive Officer of the Credit Union Association of the Dakotas, based in Bismarck, North Dakota. We've also been talking to Mr. Jeff Olson, a Vice President of Advocacy and Awareness for the Credit Union Association of the Dakotas. We've been talking about credit union issues, regulation, and why a credit union is a swell place to put your money. Thank you, gentlemen, for coming, and thank you for sponsoring the show.
Our pleasure.